All right, in today's video, we're going to take a long-term look at gold, and I'm going to inject some reality. Unfortunately, gold bugs, precious metals investors tend to be pretty emotional. I think most of them, especially retail traders, are way too short-term focused. So I'm gonna show you kind of how gold moves and what we can expect here. So first off, I think all of you know the rule: the bigger the base, the higher in space, and we've got some pretty good examples of that here. So here was a pretty long basing phase here at about about 700, give or take. It took multiple attempts to try and get through this. This was the top of a C wave, by the way. Then we had a D wave decline, A wave advance, B wave, and then the next C wave started. And then it took multiple months for this to break out. Tested 700. Well, the initial where the C wave topped at a little over 700, and then we tested this like 3-4 times before finally breaking out. But then once it did, gold took off. A big move. Pretty good sized base, and then once the breakout occurs, you get a big move. And then we get the top of our next C wave, and we get a move down into an 8-year cycle low right here. And again, it's the same pattern playing out. Here was our top. Here was the first test of basically of 1,000, second test of 1,000, third test or fourth test of 1,000, and it wasn't really until the fifth try or fourth try after the initial where the rally stopped. So the fourth try before gold could break out above that 1,000 barrier. But then look where this thing went from that point to a little over $1,900 from a bottom at about $670. So a huge move once this breakout was sustained. So we're getting the same thing here. We've got our 8-year cycle low right here, and now we've had a small breakout above this peak. But the problem was it's just coming too late in the intermediate cycle and probably too late in the 8-year cycle. So now we're stuck in this same pattern of it's going to take multiple tests of this resistance zone before we're going to be able to break out. And I'm going to tell you right now that we're very unlikely that gold is going to do that. The sustained breakout, this kind of a breakout right here, it's unlikely that that's going to occur until gold gets past the next 8-year cycle low. Now I think there is a reasonable chance that the dollar is going to top sometime here and move down into an intermediate degree bottom, and when it does, I think gold could come back up and test this again. But I'm going to tell you right now, I don't think it's going to get through this, and then we're going to have to come down again and probably get maybe an 8-year cycle low, like I discussed in my last video. If we get a major stock market crash and deflationary event in the spring or summer of 23, and that would be the potential spot for gold to give us that 8-year cycle low. And then we could come back up, and we might have to even test that level another couple times before we break through. But just be aware that we are not going to get this major breakout and huge run into the bubble top in gold during this 8-year cycle. So if you are just completely short-term focused and you want this move to happen now, and you're not going to be satisfied unless it does happen now, well, I'm going to tell you, you're going to be disappointed, because it's not going to happen now, and it's probably not going to happen until 23 and maybe even into 24 before we get the sustained breakout from this level. So if you aren't prepared to hold that long, then you're just wasting your time. And if you're not prepared to buy these dips, you're also wasting your time. These are your opportunities to buy. Just like, this was an opportunity to buy. This was a great opportunity to buy. This was an opportunity to buy. This was an opportunity to buy. Every single one of these corrections was frustrating as hell in real time, but they were in actuality, those were your buying opportunities. Those were your the times to accumulate ahead of the breakout. Now, sure, I guess you could wait for something that looked like a breakout, and maybe by this point here, you decided that that the breakout is confirmed, and you could start buying there. Of course, then you're going to get caught in that correction and probably sell. But if you want to really make the big money, then these are your buying opportunities, even though in real time they're very frustrating and it looks like the gold's never going to go anywhere. And that's what looks like is happening right now. These are your buying opportunities here, even though we're probably going to have to test this resistance once, twice, maybe 3 more times before we break out. But as long as you're using these dips to accumulate physical, then you're getting positioned for the breakout, so that when it occurs, you will already be in at these lower levels and you're going to make a lot of money. But you're going to have to be prepared to weather the sideways churn and the 8-year cycle low that's going to occur in here somewhere before this breakout comes. If you're not prepared to weather this choppiness, then you're going to miss your opportunity to be loading up during this consolidation phase, just like all of this mess right here was actually the opportunity to load up for this move here.